Hello guys, good evening. It's your boy was the just and just so you know, I'll be doing regular shows on YouTube where I'll break down the market piece by piece, post week, and tell you what I'm anticipating for the upcoming week. So the first thing we'll have to look at is the economic calendar, and then we'll look at the chart so we'll be able to properly forecast where price is likely headed. But first things first, I would like to thank our personal Lord and Savior, Jesus Christ, for bringing me here. It's been a rough ride, but He's got me covered. So without any waste of time, let's dive into the intricacy of the matter. So the first thing I'd like to mention is this should not be taken as trade advice. Trading is actually very risky and you stand to lose a lot of money. This is for educational purposes only. And you trading with capital, you should only trade with capital that you can afford to risk. So now that I have that off my chest, we can finally dive into the intricacies of the matter. So the first thing I would like to show you is the economic calendar for this week, where we have non-farm payroll on the 6th of February 2026. And Monday is definitely a tradable day when it comes to non-farm payroll. And so we have a pretty loaded week in front of us. And we'll now dive into the charts to see what things are salient for us. But first of all, I'll have to do a recap, or maybe I'll walk you through what transpired last week. I was actually anticipating a sell from Thursday, which unfolded beautifully, and I stayed out the whole of Friday because after a large range day, what usually tends to happen is the market becomes choppy. The large range day, which was Thursday, the following day, the market becomes very choppy and unwilling to move. So these little things you have to get under your belt in order to become a better trader. So let's get in. So the first thing I want to show you is this chart, right? This is the 4-hour chart, and as you can see, we came so close to the high. If you follow the content I've been putting out for the past week, you'll be able to see where I was following the particular market directions on the high. I initially highlighted this relatively poor high, that this is where the market was trying to gravitate to. The market will gravitate to clean highs. When I noticed that we had switched our perspective, or we had switched from a sell program to a buy program towards the end of January, I had to start looking for higher prices. And January is simply a mess, I would say so. The chart's a little bit rowdy. As you can see, we took out the high relative beautifully, and then we plummeted back into the range to some random level. So I'll begin to break down what happened on Thursday, right? I usually do my trades. I trade just in queue. I want to show you the SMT here, but I want to hold up that. So we came on Thursday, and I'll do the 1 minute. So the blue line signifies first presented fair value gap. The orange line signifies an inverted fair value gap. So let's dig in. I didn't really participate much because I have a job and sometimes it's stressful. So we have our opening range gap. Mind you, I will show you the opening range gap from here too, right? This is it. It got filled beautifully, got to mid gap and it got filled. So the first thing is during a large range day, when we're anticipating a large range day, we should also anticipate that the market might come outside the line. We had left a portion of the opening range gap here on the 22nd of January. As you can see, the market dived back down into to strip that liquidity and get to mid gap. We had relatively poor lows here and the market took it out. So there you have it. It's a little bit slow, but there we go. This is Wednesday, and or here on Thursday. So we had a very small opening range gap, and we had an opening range gap that was not closed on Wednesday. So the market had to gravitate to it quickly, and then seeking all through all these are opening range gaps. So the market had to seek through all of these opening range gaps to the relative equal lows I had highlighted. I don't think I've yet shown you where I was expecting the market to run to after taking out the high I've showed you. So we have our first presenter fair value gap, and I'll walk you down using our levels, right? So using this first presenter fair value gap, the market did not even want to come back to it. So this shows signs of weakness. It used this fair value gap here to send the market lower into the suspension block. This is a spot. The green line here is a suspension block. I can't show you everything now because I'm in a haste and I want to make sure this isn't long-winded. As you can see, the green line is a suspension block that formed. It's quite far, so I don't really want to show you. The green line is a suspension block that formed at a certain point in time, and this was my initial target. This low that formed on Wednesday. You know, one good thing is the market tends to seek liquidities at 3 days high and low. So if you can actually map out the 3 days high and low, the market will actually seek liquidity above or below, above which is buy side or below which is sell side. And as for some reason, as you can see, these were relative equal lows, and we had the low on Tuesday, right? And we had the low on Wednesday, which is this. So we're going higher, and therefore it's only logical for us to know that okay, we'll have a certain level of retracement, and the market, what would the market want to run to? Will run down to 3 days high and low. This is Monday's low, as you can see at 5:30. I'm pretty sure the market took it out, as you can see. So we had this level, and the market was unwilling to even get back to fair value gap, taking out this level. This level is what we call, excuse me, this level is called the new day opening gap. The new day opening gap, and they serve as magnet where price will want to gravitate to them, So I got into the charts here. I waited for a short-term retracement into this first presented fair value gap, as you can see, and I waited for the market to give me a sign where we want to go lower, right? As you can see, it dropped, and I was already all over it during the second candle. I had the possibility of pyramiding here, but I do not know how far the macro wants to run to. You see, beautiful entry, and connected with this is not really something I would like to use because it will not take out any visible liquidity. So this is a fair value gap on the 1 hour, targeting this and the relative equal lows I showed you here, which were posted on Monday at 3:30. So that is that, and we kept on plummeting lower right down to Monday's low. So when you have these reference points in your chart, it gives you the confluence and the confidence that okay, the market's about to run to these particular levels. We're high at the premium, and everybody will want to be like, okay, we're going to take out all-time highs. Okay, we're going to take out all-time highs, and suddenly we had this steep drop. you know I already anticipated a steep drop because we are taking out a measure of liquidity towards the upside. I wasn't really looking at S&T, but just from the feel of the charts, I've done this for quite some time, and I'm able to anticipate and better understand the charts clearly. Okay, we're going to have a measure of retracement, and where can the market run to? This line was drawn 3 days prior to us having all of this move. It's rather unfortunate that I do not have the charts to show you now. I do not have anything exposed, but I already knew that the market will want to gravitate back to this relative bonus because the market will want areas where they are smooth, right? As you can see, this relative equal highs here. When we are done with our downside objectives, the market will turn to gravitate back to it. Let me just show you what I'm talking about. You see, um, let me use this. All right. And I want to keep on going, and I want to extend it to the right, and I want to make it a little bit thicker, right? Let me make it thicker to show you that the market will gravitate towards smooth lows. As you can see, after objective, the market wants to seek for a short-term premium. You see, and SMT is here. I would have shown you I would have shown you on the I would have showed you on the charts in quick chart, but I really don't have the time now. But after we took out this relative equal, these quadrants are the opening range gap that was posted in November. This particular quadrant, as you can see, the market dipped down and we began to run. And any logical person will think that, oh, what would the market want to run to? The market want to seek short-term premium, right? Short-term premium in the form of relative equal highs. And there you go. That's it. We took it out, and since it's January, we went past it a little bit, seeking further liquidity, and then we later on came back down, you know, so for the close of the day. So the other thing I want to mention is I want to show you what I was talking about. After a large range day, you should avoid participating in the morning session. I could still trade in the afternoon session, but it wasn't really worth it. Look at all through the morning session, we had a very, very choppy mess. So when I saw the chart, I knew that this was going to happen. You know, price taking out highs, taking out relative equal lows, taking out relative equal highs. Now, for a newbie that will come to the chart, the first thing I would like to mark out for the upcoming week will be these relative equal highs. Here, I know for a certain that the market wants to run for them. It's very, very clear. Except it has already run for them already, which it hasn't. Now we are now trading at a discount, and everybody's thinking that maybe we want to drop further. Maybe we want to drop further. But the market will turn to gravitate towards relative equal highs and relative equal lows. And we're making this area jagged here so that we can run for these highs here. And if it runs this high, where can it run to? We have relative equal highs here, and then we have a huge sell side imbalance, buy side inefficiency. So there you go. I'm just giving you my weekly forecast. I'm bullish, still on a queue. This is simply a drop to take out everybody that has been participant and that have made so much money on the up move. So that's where I'm betting my money on this upcoming week. That the price we want to gravitate towards this area to take out this relative equal highs here, and possibly we want to fill this sell side imbalance, buy side inefficiency, also take out this relative equal highs here. So how's that? So looking at the economic chart, at the economic calendar, it's safe to say that during non-farm payroll, we probably see movements on the upside. You know, this will serve as a beautiful day where we can actually check out the relative equal highs I just mentioned. Monday, maybe I would stay out on Wednesday and Thursday because they serve as accumulation days for the market, so that non-farm payroll will run both the sell side and the buy side. The whole market efficiency paradigm is you accumulate, you manipulate, and you accumulate or consolidate, you manipulate, you expand, or you reverse, and then you go back to consolidation. So that's just how. So when coming into the charts, you're expecting something. The first thing you have to do is, okay, where does the market want to run to? What is the market doing? Is it accumulating? Is it expanding? Is it manipulating? Or is it reversing? So that's the whole market efficiency paradigm. And when we have that market efficiency paradigm locked in, we'll be able to accurately tell where the price we want to run to next. Even if you're not making money in the beginning, but you stick at it, you're able to know for sure where the market wants to run to. You're able to know for sure where liquidity is at. You know, it's only a matter of time where you become a profitable trader. So that is that. Um, Looking at the 4 hour, really dropped it down, bro. Really dropped it down, and we have this sell side. But is it logical for us to use that as sell side? This low formed at 9 o'clock on Thursday. This is, I can't really say, but it was a low I showed you, right? This is the low I showed you here. So we have sell side. It's kind of small, but the market might want to gravitate towards that area to take it out before we run higher. I can still be completely wrong. I'm human, and everything is possible when it comes to trading. So this is a suspension block I would like to show you on the 4 hour, on the daily, where you can see This is it, the new week opening up. This is where we're currently trading. This is where we're currently trading. And then we have the suspension block. The suspension block is simply a candle that forms with a wick and it has left a space both above and below. So that's the suspension block. And these are very highly sensitive areas. As you can see, the market touched the top of the suspension block. Generally, I would run quadrants through the suspension block, but the chart is so messy and crowded. I wouldn't want to add any more graffiti on it. As you can see, the market hit the upper quadrant of the suspension block, and we had this large run. And in one single day, look at what happened. We eroded all the profits back into the range, So where would the market want to run to next? You have to wait for a telltale sign to show you where the market wants to run to. But I already showed you in a very short term where the market wants to run to, right? So there you go. This is the only market I cover. Subsequently, I want to add more instruments to my arsenal, And with that, I would like to say thank you for tuning in and good luck and good trading. Be safe.